All right, welcome back to another episode of Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's good, Wale?
Not much, man.
Man, we see Nvidia's out here doing crazy, crazy moves. $5 trillion in less than 3 or 4 months. Man, I mean, from four to five in less, what, 3 months, 4 months? That's crazy, crazy movement, man. We've been talking about this. Nvidia is becoming one of the most valuable companies on the stock market, period. You know, based on this different strategic partnership that they have, different AI and and chips and all the stuff that they're gonna have. Like they're just becoming like a giant octopus, just reaching for everybody, grabbing grabbing everybody, man. It's crazy, dude.
Yeah.
But the overall market today, man. Before we jump into the video, the overall market today, the index, it kind of ended up a little bit mixed. I mean, look at the S&P 500, it kind of almost closed a little bit flat, nothing crazy. But yesterday, man, we hit like crazy amount of all-time high. The Dow Jones kind of dropped down a little bit. The Nasdaq, about 0.5%. But apart from that, man, Nvidia has been going like crazy. 45% to become the first company to reach 5 trillion market cap. I mean, let's talk about that, man. Like I feel like I don't know if there's another company that's moving at that speed right now.
No.
It's Nvidia. Like, I mean,
So,
it passed all the big boys that we like Microsoft, Amazon, Google. It passed all those guys like in no time. That's crazy.
and the thing is that's crazy. I think they hit 4 trillion in July of this year, and their market cap grew another $1 trillion in less than a year. So that just gives you an idea about the power of compounding. And
Yeah.
Jensen Wong at the GTC conference that they had yesterday in DC, it to me it seems that if you are if you want to be successful in the AI arms race, everything goes through NVIDIA. They kind of reminded me of the 90s Bulls. Like if you wanted to win a championship in the NBA, you had to go through Michael.
Yeah.
And NVIDIA is building, I think you said it, they're building the infrastructure and laying the foundation for AI that it's going to be hard to like uproot them out of the system.
Yeah.
Like again, I go with that example of the central nervous system. They're the spine, they're the spine and the
Mhm.
brain, and
Mhm.
everything else
Mhm.
just kind of just branches off from there. I know that Qualcomm was talking about making chips that's going to rival NVIDIA. I know Intel and AMD have been talking to other companies, but to me, the big boys are doing business with NVIDIA,
Yep.
and everybody else is kind of like
Yep.
second place at this point,
Yep.
which is
Yep.
crazy.
Yep. And I feel like they're kind of a little late to the game too. So I think with Qualcomm, I mean that's a good move for them, but they're not going to be like the first company that the big boys would think about, right? Like, oh, if I want to get like some chips, they're not going to think about Qualcomm right away. They probably the
No,
first names going to come into their mind is Nvidia, right?
yeah.
Now, with everything being built on top of Nvidia chips, I wonder how valuable Qualcomm is going to be and all this stuff. So we'll see, man. But
Yeah. The
I
way
think
I, s-
Nvidia
yeah,
just solidified themselves. Like that's
the
crazy.
the way I see it is like if you're looking for an AI partner, you start with NVIDIA and see if you can afford their price point. And if you can't, you got to start moving
There
down
you
the
go. Then
chain.
you go down the chain. Yeah, man, you got to. You got to. You gotta be like, oh, who's cheaper? Who's the next one?
Exactly. Exactly.
But I mean, if you look at, so let's talk about some of the risk then that comes with it. So is the $5 trillion is a lot of the things that Nvidia are talking about is all future. A lot of them is all future based, right? So it's like
Correct.
based on the things that they predict this market is going to do in the next 5, 10 years. So
Hmm.
$5 trillion, do you think that's like the future priced into that $5 trillion, or do you think like there's a room for it to grow even more than that? Because can we see 10 trillion next? I don't know.
I'll be honest with you. I'm gonna go out on a limb and say by 2027, 2028, I feel that NVIDIA could double to 10 trillion in the
That's
next 3 years.
crazy.
I
That's
think they
crazy.
can. I don't know how they're gonna do it, but I wouldn't be surprised. Now, like I said, I don't think that they're going to be moving at the same speed like they're moving now,
Right.
but I do feel like in the next 3 years, I could see them at $10 trillion market cap.
Yeah,
Yeah.
man.
So the only thing that I said, like I said, we don't know if the demand is actually going to play out the way people see it, right?
Yeah,
People are saying, okay, this is a $1 trillion opportunity for AI build out. We don't know if that's going to holistically come into fruition yet.
yeah.
Could it? Yes, that's the estimate. I mean, shoot, it might exceed it. We don't know. It
I
could
don't
be
know.
1.2 trillion or 1.3
Yeah,
trillion. We don't
yeah,
know.
yeah.
And the fact that we're going to talk about the earnings from Google, Microsoft, and Meta, none of those companies are slowing down on investing in AI. No
Nope,
one's pulling back.
nope.
So they probably see the potential and they're probably like, we need to be aggressive in doing what we need to do. And
Mm-hmm.
then you look at the US government, and I think Broomfield or Brookfield, which is a real
Mm-hmm.
estate company, they're investing $80 billion in nuclear plants.
Mm-hmm.
So that announcement came out yesterday. You saw what happened with CCJ yesterday.
Yeah.
CCJ went crazy. So everybody's making the push to the same thing. And in my estimate, I always ask myself, could this many people be wrong?
Mm.
Like that this would if it doesn't build out close to what people are estimating, that means everybody's been wrong.
You're wrong. Yep.
Like everybody has been wrong.
Yep.
And could
Yep.
this many people be wrong? My answer to that is probably not. So
Nope. 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 But I think it's gonna be an interesting story that will continue to unfold over the next
yes.
years. You
Yeah.
know,
Hmm.
so I
Yeah.
mean, we talked about this several times. Like the infrastructure needs to be supported somehow. So now you start thinking about all these other different players that can come and support this giant movement that we're having. So
Yeah.
um, I think it's gonna be interesting, man. I honestly think it's gonna be an interesting 2, 3, maybe even 5 years to see what those
Yeah.
companies are gonna be. That's gonna be crazy.
Correct. The way I see it now, it's kind of like we go back to the early 2000s, 20 years ago, when the internet was building out, when the
Yeah.
iPhone was building out, all of the technology that was revolutionizing our future. I was younger then, so I wasn't really tapped into what was really going on. But you
Mm-hmm.
look at
Mm-hmm.
what happened with Apple, you look at what happened with Google, you look at what happened with, Microsoft eventually figured it out.
Yep.
Amazon, like all Netflix, like all of these companies started with a simple, basic concept and then grew into these behemoth companies because
Yep.
they changed the way we live. NVIDIA is kind of doing the same thing, but now that you're kind of older and you're kind of tapped into what's really going on, and the speed at which is happening now because technology has gotten so much better, it's just crazy.
It's
So
crazy.
you can't you if you don't understand where the next investment opportunities are going to be over the next 5, 10, 15, 20 years, you're sleeping under a rock because I
Yep.
think it's obvious.
Yep.
I think
Yep.
it's very obvious. So, pay attention to what's going on.
Yep. It is very, very clear at this point.
Hmm.
Um, let's move on to well, before we move on to that, I think the other thing I think people I see a lot of people talk about, and I know we mentioned this several times, is this is not a bubble. This is not a bubble. And even Jerome
Correct.
Powell said today, he's like, the AI boom is not a bubble. This is totally different from the 2019
Correct.
nine. This is
Correct.
completely different. The move that we are seeing is supported by so many different things, you know?
Correct.
So
I keep telling people, like, I understand that financial professionals, let me put it, I'm just going to say financial professionals. Financial professionals, when they're managing money, they can't get overly excited about spending too much money when there's a lot of exuberance in the market. Like, you have to
right.
be really prudent. But just because we're at all-time highs and things are moving in that direction doesn't necessarily mean that we're at a quote unquote bubble because there is substance behind what is
Substance.
driving the market. Like, we're
Yep.
going to go over the earnings from Google, Meta, and Microsoft today. And I mean, you're talking about, I think Microsoft is they're net profitable $100 billion a quarter.
Water.
Net profitable. I'm not talking about gross. Net
Mhm.
profit for the quarter was over 100 billion. You multiply that by four, that's $400 billion in net profit a quarter,
Yep.
assuming that they keep the same trajectory every
Yep.
single quarter. So
Yep.
this is there's substance behind it. But like I said, there will be some companies that may not necessarily make it in the end, but the big players are still going to be there.
They're gonna be there. They're gonna
Yeah,
be
they're
around.
going to be there. So
Yep. Yep. Well, we heard from our boy Jerome today. I was seeing all the Jerome memes today, man. I was like, that is so funny. That Jerome now was like, he comes up. I wonder once he leaves, man. I wonder who's going to take his place and how that person's going to be. Because I feel like Jerome has been the most famous Federal Reserve person I ever been seeing.
Correct. Yeah.
He's more famous than Greenspan now. I was like, I don't know anybody remember Greenspan anymore, but
Yeah.
um,
Greenspan and Bernanke didn't have the same type of.
no, I mean they grew up also in that there was no social media, right? And
That's true. That's true.
yeah,
That's true.
so
That's true. That's true.
but Jerome is out here getting nicknames, Uncle Jerome, and all the different things. I was like, that is hilarious. But yeah, the Fed lowered their benchmark funds rate by 25 basis points. I was hoping for 50. And I
I
think somebody was in the camp that said, like, we should do 50. And somebody said we shouldn't do anything. But Jerome was like, we're gonna do 25. So um, but yeah, but they lowered down to 0.25. So that brings us down to about 3.75 and 4%. This is the second. For some reason, I thought we had a lot more rate cuts, but this is only the second rate cut of the year. I did not
only the
realize
second
that.
one. Only the second one. Yeah, we had the first one in
In
September.
September, yeah.
Yeah. So
I was like, why? I was like, why did I think it was gonna be like this? Is gonna be like 31. I was like, damn, that's crazy, man.
no.
But I mean, the other thing he said is like the rate cut for December is not guaranteed. So
Yeah.
and again, that's gonna be based on how everything kind of showing up right now. So some of the reasons why they made the move is that the labor market is showing signs of weakness, and we're gonna talk a little bit about that. There's a lot of layoff, guys. Like pay attention to those numbers. It's crazy numbers coming down for like people getting laid off and an increase in unemployment too. That's going up. And on top of that, hiring is slowing down. Like it's slowing down. So let's talk about those numbers a little bit and what was your thoughts on what Jerome and how did you feel about his tone too?
So the thing that this is the thing that I took, the most important piece that I took from Jerome's meeting today. He made an analogy about the government shutdown and not necessarily having all the data that they need to make decisions. He says, what do you do when you're driving in the fog? You got to slow down.
Mm-hmm.
So he's basically is saying we're kind of flying blind a little bit. We're trying to gather as much data from different places as much as we can, but we might have to slow down because we can't necessarily see what's in front of us as clearly as before.
Yep.
And that is why we saw the market kind of take that move downward. Because I think what the market took that is as okay, we're expecting another cut in December. We don't know how long this government shutdown is going to last. And if the Fed is flying blind, they could pause.
Yep.
And I don't think the market liked that. Now,
Mm.
if the government shutdown extends into December, oh man, that's not going to be good.
It's not gonna be good at all.
But Jerome basically told everybody that we don't have we don't have all the data points and all the visibility that we need to make decisions. So we might have to take it a bit easy. So we'll have to wait and see. And, again, even though the markets are still moving with the government shut down, when you look at it from a macroeconomic standpoint and all of the pieces that kind of fill in those gaps as far as data is concerned, you kind of need the government.
Mm-hmm. Mm-hmm. Mm-hmm.
So that is important. And, they got to figure out how they're going to navigate through that. But I think that the market did not like that. That's why it sold off initially. It did eventually bounce.
Yep. Yep.
But, I don't think that message was not taken positively at all.
No, no. People didn't like it. You can see the market kind of sold up a little bit, and then it recovered, but I don't think it recovered all the way. You know what I mean? So we'll
No.
see. We'll see how after we ingest all this data, we'll see what happens tomorrow. But
Yeah.
overall, man, I think, like you said, I think the Fed kind of stuck.
Yeah, they're stuck.
It's
They're
like
stuck.
what are we gonna do? Should we go ahead and like rejuvenate this economy and fear that we might end up somewhere else that we don't want to be, or should we worry about inflation going down? So it's like it's this they're literally stuck in the middle. You know what I mean?
Yeah.
And
Yeah,
not having enough data is crazy.
their hands are tied right now.
Yeah,
Their
yeah,
hands are tied, and that sucks. But again, it's just the reality that we live in. And if you keep looking at the back and forth between Democrats and Republicans when it comes to the shutdown, there's
yeah,
no sense of urgency to get anything done.
yeah, yeah.
There is no sense of urgency to get anything done. I'll be honest with you. If I were to bet, I think we'll get to 40 days.
Man.
I think we'll get to 40 days.
Oh man, that's gonna suck, yo.
Yeah, that's going to suck for a lot of people, but I think we're going to get to 40 days because I've seen those TSA lines. I've seen people complaining about not getting their SNAP benefits. Like,
Yeah,
man, that
yeah.
people might start rioting in the streets.
They're pushing people against the wall. You know what I mean? And
Yeah.
and it's sad because there's politics involved in it. You know what I mean?
And
There's a reason why
people's
things.
real
Yeah,
livelihood is being affected.
yeah, yeah, yeah.
So, but
I saw this video of a lawyer in his suit serving hot dogs on the street today. He's an IRS lawyer, I guess. He's like, "Hey, we're not getting paid. We're not getting paid. So guess what? I gotta figure out a way to make money." I mean, that's very extreme, but at the same time, it's like there are people who are out there who's like literally depend on this, right? So
yeah.
how do we resolve that as soon as possible? But yeah, both sides are playing with people's livelihood, and I don't think that's right. I really don't think that's right.
And what I'll be surprised at is, I mean, we're starting to get into, for retail businesses, this is their best time of the year.
Yeah,
And if people don't have discretionary income to spend,
yeah,
do we start seeing a slowdown in, in consumer spending? Now, granted, if something gets resolved, people might get their back pay, so that that makes up for everything. But if this thing continues to extend and it goes into the boom, I call it the boomer bust season for retail, that's not going to look good in the
it's not
data.
good.
That's
That is
not going to
not
look good
good.
in the data.
That is not
I
good.
think the only incentive there is maybe it forces the Fed's hand to have to cut in December. But yeah, I don't know. It just rubs me the wrong way that they're just kind of playing games with people's
Well,
livelihood.
this might be another reason for them to get those rate cuts. You know what I mean? So,
Exactly. Yeah. Yeah.
um,
So we'll see.
yeah, but yeah, I mean, um, the employment data is not helping either, right? So we just saw massive layout from was it Amazon? I think Amazon lays off some people.
Amazon. Yeah.
I mean, that was crazy number of people that they laid off.
So you want to hear another one. So let me give you some numbers that I wrote down as far as layoffs in 2025 in big companies. I'm going to start from the biggest to the smallest. UPS,
UPS.
48,000 jobs. Amazon, up to 30,000 jobs. Intel, 24,000 jobs. Nestle, 16,000. Microsoft, 15,000. Accenture, 11,000. Ford Motor Company, 11,000. Nuvo Nordic, 9,000. PwC, 5,600. Salesforce, 4,000. Paramount, 2,000. Target, 1,800. Kroger, 1,000. Applied Materials, 1,440. And then Meta, 600 people. But the top two companies, UPS and Amazon, and actually top three, that's almost 100,000 people.
Yeah,
100,000 people, which is crazy. So
that's
I'm expecting unemployment to go up soon.
yeah. Oh yeah.
I,
And
I'm
when that numbers hit the tape or the whatever,
yeah.
oh man.
Unless, like I said, unless those people who get laid off eventually find jobs elsewhere, like quickly, so
Mhm.
they don't show up in the system, that might help curb the numbers. But those numbers that's not something to sniff at. And I think Chegg, I don't know how many CHGG, I think is their
Mhm.
ticker. They're laying off 45% of their workforce.
Sheesh.
And let me see if I can find what their workforce number is. Let's just CHGG. So according to the internet, okay, they have 1,200 employees, so about 500 people are going to get laid off. That stock is down 95% in the last 5 years. No, sorry, 98% in the last 5 years. So they're on life support right now. They need to, that company might be getting chopped on the chopping block.
That's crazy, man.
Yeah.
But
That's
also, if you look at their business model, they're like they don't really need a lot of people, right?
not,
Especially with the AI being in the industry right now, they don't need a lot of people,
no,
and that's the most scary thing about this type of layoff that we're seeing right now. It's not like a layoff because a company is having a bad. I mean, Amazon is laying people and they're having like record breaking revenues. Microsoft, same thing.
yeah,
You know what I mean? They're not laying off people because they're not making money. They're laying off people because they have found ways to cut them out and still be productive and still be making money. So I think that's the most scariest thing, that it's not like a layoffs with like, oh, when the company started going good, we can hire you guys back on.
going,
No, this
yeah,
is a
going
layoff.
through, yeah,
Like
they're not going through hard times.
we're not
Microsoft ain't
bringing you
going through
guys
hard
back.
times.
Right. We're not bringing you guys back. Go figure something else to do. You know what I mean? And that, I think that's the most scariest thing in this times that we're in. So it's like once you get laid off, you almost have to like figure out what jobs or what certain things that I can do that would not be impacted down the road with, technology be replacing me and stuff, And I mean, Home Depot just put out this whole certification where you can basically go learn how to be an electrician or whatever it is that you can be. I mean,
Yeah,
at
because
some point,
AI is not going to replace those guys.
yeah, at some point, like the minute jobs that is very repetitive and is able to be programmable and coded and given to like AI to do it, those are going to be gone. I'm
Yeah,
sorry, like, and we're seeing it happening, and it's sad.
yeah, it's crazy. It's crazy.
Yeah, but that's a real life example when technology comes and I know we talked about this like last year. I think the main thing we talked about was if you go on highways, the toll road, right? The toll road used to be like 10 lanes, just people getting cash, using your credit card. Now, probably one, maybe if that. I think the only state that I know that still have like you have to pay cash is Virginia.
Oh, okay,
If
yeah,
you go to Virginia, make sure
in
you
the
carry
I
cash.
think in the Bay Area we have 8 or 9 bridges.
Mm-hmm.
No, nobody mans them. It's
Gone,
all
gone.
electronic now.
Yeah, gone. And that was
Yeah,
a simple solution of tracking and making sure you get charged. That's
yep,
it. It
that's
wasn't
it.
even AI. It was literally just track the plates, charging this amount. That's it.
Yeah, the only thing they spending money on is stamps
Yeah,
to send you the bill.
yeah. But
That's
imagine
it.
like none of these people ever came back.
Nope,
They're not gonna be like, oh, now we can hire toll workers again. Nope, it's gone. They're
nope.
gone. It's gone.
And the
Parking
toll
garage.
and the price to pay the toll has gone up. So
Yeah. So it makes no sense still. It's like
it's
we're
like
not paying people
correct. We cut our budget, but we increased our prices.
to make money. To make
That's
money.
called that's
You know?
called greed.
Yeah. Parking garages. I don't know if you remember going to the hospitals or big garages where you park. There used to be somebody at the thing to open
Hmm.
gates for you in and out. Those people are gone. Like
Gone. Yeah,
it's crazy. So I think the same thing is happening here, but it's happening with very mass amount of people. You know what I
correct.
mean?
Yep.
So and that's kind of scary. Like we're seeing a lot of big layoff in the technology, like the big tech. Seeing a lot of layoff in manufacturing, in retail, corporate
Con-
functions, administrative.
Consulting. Yeah.
Yeah. Even government, like we see a lot of government people being laid off now, health, public administration, like some of those things are just gone. And then I don't, and unfortunately, they're not coming back.
Yeah.
They're not coming back. So it's scary. It's a scary time out here. But apart from that, let's talk about some of these big earners, man. So Microsoft, Google, and Meta all reported after hours today. And the only company that's up right now is Google. Microsoft is down. Meta is down. So let's break those numbers down so we can kind of like see exactly what's happening.
Yeah. So let me go through the numbers, and we're going to start with Meta. So Meta. So this is why I keep saying that we're not in an AI bubble. Just put these in. We're talking about quarterly numbers, not annual. We're talking about quarterly numbers. So listen to the numbers. Meta had revenue for the quarter of 51.24 billion, which was up 26% year over year. But they did take a hit on their EPS. So their bottom line got hit pretty hard because they had a one-time non-cash tax charge of $15.93 billion. So basically call it like a write-off or something they had to write off on their bottom line. operating margin, though, is still 40%. So they're still an efficient company. So they also said that they're continue to guide higher using their money to continue to spend money on CapEx or capital expenditures. And that number is going to increase. So they're anticipating having to spend more money on the AI build out. So that's just Meta. The only red flag that they have was that one-time tax charge. So, take that with a grain of salt, in my opinion. But to me, overall, nothing wrong with the business, just except for that one-time thing.
Yeah.
Let's move to Google. Google, we're talking quarterly revenue, $96.43 billion, which is a 14% increase year over year. EPS 2.31, which was a beat, up 22% year over year. Google Cloud revenue grew by 32%, $13.6 billion in Q2, and the company noted that they are going to keep spending money on CapEx. So, to me, what I keep seeing is that if they're spending money on CapEx, they're probably seeing return on investment. And they're probably like, okay, well, we're seeing some good trajectory of spending money on AI and
Yeah.
making us more efficient. So they're saying that we're going to continue to do that. Now let's jump to Microsoft. So this is Microsoft's quarterly numbers. Listen to this.
Easy, man.
$281.7 billion for the quarter. For the quarter, 15% increase year over year. Net income of $101.8 billion.
That's nuts.
EPS of $13.64. Their cloud service grew by 39%. It says commercial bookings exceeded $100 billion, up 37% year over year. So Microsoft is down after hours. I would be taking a look at Microsoft tomorrow because there's nothing wrong with these numbers. Why they're down, I don't know.
Ooh.
Maybe there's something that I'm missing, but they blew it out of the water. So if you look at the revenue that the companies that are spending on the AI build out, we're not talking about fluff. We're talking about actual revenue and profit that they're reinvesting into being more efficient companies.
Right.
So that's why I said this is not a bubble because there's actual substance behind what they're spending money on. So again, we'll see how the market reacts tomorrow. I will say that with Microsoft and Meta being down, we'll probably get maybe some sideways trading, because Google's up big right now. I think Google's
Yep.
up like 9% after hours or 8%. Let me see. Let me go to my big cap. Okay. Yeah, Google's up, okay, 6.87% after hours. Meta's down 6%. And Microsoft is also down about 3%.
Yep.
But I wouldn't be surprised if we start seeing buyers tomorrow in Microsoft
Yep.
based on those numbers. So,
Yep. Absolutely. And like you said, I'm shocked that they actually dropped that much. You know what I
yeah,
mean?
me
So,
too. Yeah,
yeah.
me too. This could all change in the morning. So we'll have to just wait and see what happens in the morning.
Yeah. But I mean, those numbers though, man, like that those are crazy, crazy numbers to be able to do that in like a one quarter. You know what I mean? It's like, how do you even like, oh.
Like we're talking $281 billion in a quarter. That's insane. So if anybody knows anything about the dot-com bubble, again, if you go do your research, you're looking at companies that some had no products, some had no revenues, and they just kept popping up out of nowhere, right?
Mhm,
So
mhm.
again, just like when we had the SPAC bubble, I wouldn't call it a SPAC bubble, but we had that SPAC, when everybody was going public via SPAC, 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 all the bad apples got
Got cut off.
demolished. They
Yep.
got they got cut off.
Yep.
So to me, the same thing is going to happen in the AI race, right? There will be some bad apples that will get exposed and eventually they're going to get cut off.
Yep.
But the
Yep.
top dogs, like the companies that actually have substance behind what they're doing, I think they're going to be fine
They're gonna
and
survive. They're
they're
gonna
going
be
to
around.
survive. Yeah, they're
Yep.
going to survive. And if anything happens in the overall market that shakes everybody's feathers, I don't know, it could be a war, it could be, whatever is systemic that happens under the cover. If something happens, trust me, I'll be in the front of the line buying NVDA buying Microsoft, buying Google, buying Meta,
Yep. Yep.
because those businesses are not going anywhere.
Yep.
No, those businesses are not going anywhere. So again, we'll have to, only time will tell to see who the survival of the fittest. Some of these small companies that aren't really making money, that don't have any viable products in the pipeline, may be in trouble. That's why I keep telling people with Oklo, if anything materially changes in their trajectory and their timeline to their product, that will hurt the stock.
We'll be in
Let's be
trouble.
let's be absolutely blunt about that.
We're gonna be in trouble. Yeah.
They're going to be in trouble. But if things continue to move as they're supposed to move, again, they've got government backing, which is good, then I think they'll be okay. But you have to pay attention to what's going on under the hood with the business. If anything changes in their trajectory, let's just say they say we're not going to have our product until 2028 or 2029.
Right.
The stock's going to get slammed. So make sure that if you're invested in some of these companies that aren't profitable and don't have any viable product, like the Ion Qs, the Rigettis, and things like that, pay attention to what they're saying about their product and their timeline as far as what they're doing, so
Yep.
that you know whether you need to stay with the business or you need to get out.
Facts.
So
Yeah. Just so keep. I mean, if we get a slightest pullback, guys, like I'm telling y'all, I'm borrowing money to put it.
like in,
I'm putting the
in
house up for sale. I'm doing everything.
NVDA was an $88 stock in March
April or March, yeah,
of this year,
yeah,
which is crazy.
craziness.
So that's why I tell people, like, losing money, and remember, you only lose money in the stock market when you sell at a loss. But when you get a systemic pullback where things get a little shaky on a macro level, right? You have to look past the headline noise. Don't
Yep.
listen to CNBC, don't listen to CNN. They're going to be selling you fear.
Mm-hmm.
Find the good businesses that are going to come back.
Facts. Yep.
So again, don't let a pullback scare you if we get one. Obviously, we know one will happen sometime down the road. We
Time.
don't know
Yep.
when. We
Yep.
don't know how bad it'll be. But I'm telling you, if you don't pile into NVIDIA when it happens, you won't be mad.
You'll miss out again. Yep. 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 But yeah, but this week, man, tomorrow we have the initial jobless claims coming up. I don't know if that's gonna move the market anyway because they're not getting their numbers. I don't know what.
I don't even know if they're going to report it.
I don't know what we're reporting on.
We're not getting nothing.
So we'll see, man. So and then there's a GDP also supposed to be reporting tomorrow. I don't know if we're gonna get that because of this government shutdown. So there's those numbers might not be there. Even like Friday, we're supposed to get the personal income report. I don't know if we're gonna get the consumer spending PCE index, the PCE or year over year, the core PCE index is supposed to be also on Friday. And the crazy thing, like I feel like every time we report our PCE on Friday, some bad usually happens. Well, not every time, but majority of the time, some bad
Yeah,
happens. But again, keep an eye on those numbers because those are going to be interesting. But again, I don't know if we're going to get those numbers because of the market shutdown. So that's going to be interesting to see actually if we're going to see that. But
correct. Yeah. I
yeah,
will also say this too, is that Jerome feels very confident about getting down to 2% inflation at some point. He feels that they're on the right path. So we'll see if we get the PCE numbers. We got CPI, which was good, and that came in cooler than expected.
yep.
We get PCE, and PCE also shows that there is no, inflation, right?
Mm-hmm.
Then that to me could be a market mover, because
Yep.
that's the one thing that is hanging over the Fed's head about being really aggressive with rate cuts, is that they don't know if tariffs are going to really like spike inflation like out of nowhere. So
Mm-hmm.
far things have navigated fairly smoothly, which
Yep.
I will say this, I'm impressed, because
Mm-hmm.
I was in the camp where I was like, we could see higher inflation.
Hey, same here.
I was in that camp. I said we could see higher inflation, and so far we haven't seen it.
Yep.
To
Yep.
me, if we're stuck, that's better than a spike.
Yep.
Obviously we want to move down, but if we're stuck where we're at, I'll take that over a spike in inflation because again, what you don't
Thanks.
want is the Fed to reverse course and have to raise rates.
Yep.
That'll be all bad.
That'll be terrible. But
Yeah.
if you look at next week, we also have the job openings. I think they call it the JOLT report next Tuesday, 10 a.m. See how that goes. But there's no major. I'm trying to see if there's anything crazy next week beside. Yeah,
No,
there's
I
nothing.
know
None
we
other
got
crazy stuff happening next week.
we got Apple and Amazon tomorrow for sure.
Yep.
Earnings tomorrow, which will be probably be a market mover.
Yep.
So
Yep. Yep. Yeah, but other than that, man, I think we covered a lot of stuff today. Any last minute advice you want to give the people as we go to like this week and next week?
yeah, the only thing I will keep saying is that again, don't let don't let the headlines scare you from investing. I will say I think I've said this before. Where because the market is trading at all-time highs, stocks aren't cheap, right? Like they're
Right.
not cheap. So again, maybe this is not the time you get really aggressive with buying into the stock market. Now, I will say this, there are sectors of the market that are cheap, like
Mm-hmm. Mm-hmm.
retail stocks, maybe some healthcare stocks that have been beaten up, right? Some of these, venture capitalist stocks. If you think that these companies can eventually turn it around, and the market starts to shift, like let's say the consumer gets better, inflation comes down, then some of these companies that have gotten beat up, like your Nikes, your Targets,
Yep. Yep.
your
Yep.
Lululemons, those companies might start to come back.
Yep.
But the opportunity, you have to understand that you're not gonna see instant results right away. You're gonna probably have to wait.
Yep.
And if
Yep.
you're willing to wait, to me, those stocks are cheap, right? The technology stocks, the semiconductor stocks, those stocks aren't cheap.
Those are up there, yeah.
But if you want to start nibbling at some of these beat up names that eventually could come back, like what I did with Intel. Now, I will say this, I didn't expect Intel to come back this quickly. That
No.
I will say right now. But it did. So if
Yep.
you can find a good company or a good name, right, that hopefully can turn it around. Your Starbucks is, right? And you want to wait the next 2, 3, 4, 5 years, there's a possibility that you could be in a good
Absolutely.
position, but just
Yep.
understand that it's not going to happen overnight.
Right.
But the consumer numbers have to change and inflation has to come down. You just
Yep.
have to understand that. Until those things change, those stocks are going to have a hard time. But I will say that there is opportunity there if you're willing to wait.
Facts. Well, with that being said, I mean, you guys just got to keep an eye on the market, man. I feel like everything's kind of expensive right now,
Yeah,
which is, I mean, that's the other thing with the market. You can't really tell how expensive it can get. Like
correct.
it could just keep going for the next few months if
Yeah.
and you think it is going to drop. So don't try to time the market, but it's like trying to figure out what position you can be in. If you feel like everything, I'm telling you right now, a lot of those stocks are trading at all time high. Like their beta is huge. Like it's high.
Yeah.
You paying premium for it right now if you're buying it right now.
Hmm.
So either you wait for it to pull back, but you don't know when it's gonna pull back. So when's that's gonna happen? You might wait for a month, two, maybe 6 months, maybe a year. You never know.
Hmm.
So
Yeah. And the good thing is in nowadays you can buy fractional shares of companies.
yeah,
So to me, again, either you start to buy in smaller increments, right? So when you're getting into these companies and you're buying at highs, maybe you don't get too aggressive. Like, okay, let's just say you want to put in $1,000 into NVDA. Maybe you break that up into 10 payments of $100
yeah,
and you
yeah,
just do it smaller. Or maybe you don't even put in the whole thousand. Maybe you just put in 500
right,
and then you just again you wait down the road, or you can just again you can buy an ETF like the SMH or the SOXX where you get a broader diversification of different companies, so you don't really have to worry about when you're getting in and when you're not getting in. So
right.
I think you always want to be an investor, but I think buying at all-time highs compared to buying after like extreme pullbacks like we saw early in the year, your process has to be a little bit different.
Yep, yep,
Yeah.
yep. But
So
that's interesting, man. So we'll keep an eye on things, but again, man, just keep an eye on the stock market because there's going to be opportunities that's going to come up. The same thing we saw in Liberation Day, the same thing we saw when they reported those numbers for the job unemployment job, and stock market kind of pulled back a little bit. Those opportunities will happen. You just never know when it's going to happen. But
correct. You don't know what's going to be the driver
yep,
of what sells the entire market off.
yep, yep.
Yeah.
And you
So
would know it because everybody's going to be screaming like the market is dropping.
correct. And I keep telling people, you check the bond market and look at spreads, right? When spreads start to get wider, then you
Mm-hmm.
know something's coming. But right now spreads are still pretty tight. So
Yeah.
I don't see any, at least over the next and going into the end of the year, I don't see anything catastrophic happening. But I'm going to say that with a grain of salt because we all know that we're always one tweet away from disaster.
Yeah.
And we
Yeah.
got China and the US meeting tonight.
Deal.
So
Yeah.
we don't know what's going to happen at the end of that meeting.
Yeah.
I
Because
mean,
according to Trump, come November 1st, they're paying 150% in tariffs or something like that.
that's
It's crazy.
that yes, they so this meeting is supposed to actually I think it's happening like right now,
Yeah.
possibly.
So,
So we'll see what happens when we wake up. We could wake
yeah.
up in the morning and be down 2%.
Or it could be the other way around. You
Or it
never
could be the
know.
other way around. We don't know. So we got to
So,
wait and see how that meeting goes. So
yeah. Yeah.
yeah,
Well, that's a wrap for today, man. If you guys enjoyed the breakdown and you want deeper analysis, please make sure you share, follow, comment, let us know if anything you need that you want us to talk about. But again, stay disciplined in this market. Everything's gonna come down. There's gonna be opportunity down the road. So just keep an eye on the market. And as always, catch us on the next episode. We're here to help you guys be able to make money in the market. With that being said, yeah, have a good night and we'll